Yes. What's going on, guys? This is Ben, aka Day Trading Addict, and I have another good video for you guys. Today, we're going to talk about 4 simple technical analysis hacks that work extremely well. Trust me, you're going to love this one. So let's go. Now, today we're going to talk about a couple of things that will help you as a trader and help you grow, because that's the main thing when it comes to trading. Like, I don't really see traders try to improve, every single week. So I'm here to help you guys become that better trader, because I know a lot of you guys right now that's watching this video, you guys are struggling. So I want to help you take your trading to the next level. Okay, so let's go to some examples real quick. But before that, what is technical analysis? Well, I like to keep it simple. So technical analysis is basically using tools on a chart that can help you predict the next move, right? So a good example is a trend line, support and resistance, indicators, RSI, like, MACD, chart patterns, maybe even candlesticks. So, things like that that will help you try to predict the next move, okay? So let's go to the first example. The first hack is combine levels, okay? So I'm gonna show you guys a quick example how you can actually combine levels, and that will help you predict the next move. And when it comes to trading, what I notice is a lot of traders, they will just use one level, and there's nothing wrong with that. But I think, if you have multiple things line up, it's much better, and that trade is going to be a high quality trade. Now, a lot of times you might not get that every single day, but if it does show up, it is a good trade. So let me show you guys the first example. So the levels that we're going to use is Fibonacci, right, and support and resistance. Because again, a lot of people will just use Fibonacci by itself. Again, nothing wrong with that. But if you can actually combine it with another level, it doesn't matter what level it is, man, it could be really strong. So right here we have an impulse. Okay, so we're going to take this right here. We take it right here, put it right here, right? So we got this fib going on, and we're looking at that 50% retracement. Usually the 50% or the 618 is actually a good level to look at when it comes to Fibonacci, right? And also we have what, guys? This support area. So we have support lining up right at that 50 level. So we have 2 things lining up, okay? Not just one, 2 things lining up. So when you have that, guys, that alone will give you a high quality trade and hopefully make some profits to the upside, right? So you can get in when the market hits this level. You see a nice bullish bar, and you can just ride it to the top. All right, so let me go to another example. Okay, so the next example is supply and demand. So supply and demand is basically aggressive buying and aggressive selling. So the reason why I like supply and demand is because when the market, shoots up or shoots down, okay, very strong, that means that there's a lot of money behind that, big money. So I want to follow those big players because they move the market. So a lot of times when it comes back to that original area where we had a lot of selling or a lot of buying, we can actually get some, nice trades around that area. So let me show you guys real quick. So right here we have, all right, nice selling going on right here. Okay, nice selling going on. So I can put my zone right here and say, all right, if the market comes back to this area, I'm looking to sell. Now, remember, we're looking to combine different levels, right? So if you look to the left, what do we see? We see resistance, okay? So we have resistance right here, plus we have a supply level right here. So 2 things lining up. And if I see this right here, this will be a nice trade for me, because I'm like, all right, we have 2 things lining up. Most likely this level is going to hold, especially if I'm looking for, nice confirmation. We have a nice rejection right here. I will get in, right? So you can put your stop loss, above the zone or above the candlestick, doesn't matter. And, you look for your profits. So that's how you attack the market when you see 2 levels lining up, okay? And if you don't understand supply and demand, I actually do have an indicator that helps you guys spot these supply and demand levels. Let me show you guys that real quick. So here's the indicator right here, guys. Every time it sees aggressive selling or aggressive buying, right here, we just going down, so we're looking for supply. The indicator will show it, right? So S stands for supply, okay? And basically, when the market pulls back to this area right here, where we see this yellow candle right here and the S, we're looking to draw our zones, okay? And we're looking to take trades. So right here, we have a trade right here at this zone, right? Another trade right here at this zone right here. So we're looking to take trades around those zones. And if you're brand new to the market and having trouble to, you know, enter the market, it does come with confirmation entry signals. Let me show that real quick. So right here, guys, these short confirmation signals right here, it's only good when it's at a key level. So right here, we have, you know, supply right here. It gives you that short, comes back to supply right here, give you that short, comes back to that supply right here, give you that short. You don't want to go short right here. It's not at a key level, but it comes back to this supply right here. And basically the whole idea is to go short when it's around that zone. So that indicator right there, it only comes from my program, because a lot of people ask me, hey, you know, where to get this indicator. I don't really talk about this indicator that much because, you know, once you get used to price action, you don't really need this indicator, okay? But it is for beginners to get their feet wet. So this comes with my program, and I throw it in for free with my program. And the information is below if you want to check that out. So let's go to the second hack, and that is playing the channel. So let me show you guys some quick examples. So a channel is basically when the market is in this like wide state, but it's going down, okay? So let me show you guys real quick. So we have here the market going down, and right here it is hitting this bottom channel and it's hitting the top channel, okay? So one thing you can do is you can say you want to copy, clone this right here, and you can put this on top right here, or you can just draw it, you know, by yourself. So when you see the market in this state right here, okay, you can play both sides, right? So you can play the top of the channel or the bottom of the channel. And I want you guys to understand that this channel, all it is just a range, okay? Right now it's slanted down, right? But if you take that channel and turn it straight, you would notice that it's just a range, right? It will look like this, range. And when the market is in a range, how do we play the range? We play the tops and we play the bottoms. So that's all the channel is. So when I see the market in the channel, I'm willing to play both sides. So I actually took this trade right here. I went long and I got out at the top of the channel. So, you know, that's one of the ways you can play it. You can get in at the bottom and get out at the top of the channel, okay? And then notice how it came back to that channel. I didn't take this trade because I was in another trade, but notice how it came back to that channel, and you can go short all the way back to the other side of the channel, okay? So let me show you guys another example. We have a channel right here. You see the market going down, and this is another trade, you know, I actually got into. So this is a NASDAQ right here, and I got in right here, and I rolled this baby all the way to the top. I actually got out right at the top of the swing high, okay? So when you see the market basically going in this nice wide channel, you can play both sides. All right, so let's go to hack number 3, and that is head and shoulders early entry. Let me show you guys a quick example. Okay, so this is a head and shoulder pattern. It's a reversal pattern, right? So we're looking for a head right here, and then we're looking for a left shoulder we have right here, and then we're looking for a right shoulder. Okay, we have that right here. Now, the book will tell you that it's best to wait for the neckline to break, and then you look for, you know, trade to the downside, because this is a reversal pattern. You don't want to get in too early because we don't know if it's going to reverse or not. Now we have the neckline right here. Okay, so when this breaks, you can get in, you know, look for sells, because, you know, this actually gives you more confirmation, and there's nothing wrong with that. You can still do that. But what I like to do is I like to get in early. So as soon as it hits this left shoulder, to me, this is resistance. And if I see any sign, okay, or any selling pressure, I'm going to get in the market. So I'm going to get in the market and I'm going to look for profits. Now, the good thing about this is when you get in early, if it breaks that neckline and it continues to go down, you know, you're talking about a nice risk to reward trade. So we don't have to go by the book. We can get in early, okay, get in that trade, and then we can actually capitalize on that big move. Let me show you guys another example. Okay, so here is another good example. This is oil right here. We have the head right here, guys, right? We got the left shoulder right here, and we got that right shoulder right here. So when I see this, guys, and I see the market going down right here, and I'm looking at the market pulling back to this area right here, I know for a fact that this could be possible resistance. So I'm stalking this area right here, right? Again, you can wait until the market breaks that neckline, and there's nothing wrong with that. But if you get in early, you can benefit from that move to the downside and that break of the neckline, okay? So we're talking about getting in right here and basically enjoying, you know, nice profits to the downside, because we know how the market works. Once you understand how the market works and understand certain patterns and understand how to use technical analysis, you can actually become a better trader. And this is what I want you guys to do. So I want you guys to practice this stuff, okay? So let's go to number 4. Number 4, measure moves. So let me show you guys a quick example. Now, this is a Bitcoin chart right here. And honestly, I should have told you guys in the beginning, whatever I'm doing today, it will work on any market, okay? It doesn't matter if it's crypto, stock market, Forex market, futures. That's why I love using technical analysis. It will work in any market, and it doesn't matter what time frame you're using, okay? I'm showing you 5-minute charts, but it doesn't matter if you're using a 5-minute chart, 1-hour chart, 4-hour, daily chart. It doesn't matter, okay? Because a lot of people ask me that, and guys, it doesn't matter. So let's go to a nice measure move. So with the measure move, right, we're gonna wait for an impulse, meaning that the market goes up, and then we're gonna try to take that impulse and measure that to see how far the market could go, okay, up or down. So let me show you guys a quick example. So right here, guys, we have the market shooting up, right? So we can take this and take it to that swing low right here, okay? And notice how when the market came to this level right here, which is the top of this level, we start to sell off a little bit, okay? So this will help you try to predict how far, you know, this move can actually go, you know, before the market starts to sell off or before buyers start to come back in. So let me show you guys another example real quick. We have another measure move right here. So we have an impulse right here. So we can just take it to here, right, to this swing low right here. And you would notice how, right, it hit that top, and next thing you know, we start to sell off. Now, this doesn't work 100% all the time, but it does work, and you will see it happen over and over and over. But you don't have to fully rely on this, because I don't fully rely on this, but it is a good tool to use sometimes if you want to find out real quick how far a move can actually go before it starts to sell off or before buyers start to come back in. So let's keep going. So let's go to this swing right here, okay? So we start dropping right here, and we can take this to the downside, and notice how as soon as it hits this level right here, okay, the market start bouncing. Let me see if we have some more. Okay, we have this right here. The market popped up right here. Let's take this. And then next thing you know, the market sold off. Okay, so again, it's a tool to use to figure out, okay, maybe if the market goes up this high, we might get a sell-off, okay? So maybe I want to either get out the position, or maybe I just want to sell some just in case the market might reverse. So again, it's a quick tool. You don't have to fully rely on it, but it is good to know that this exists. So if you want to use it, okay, you can use it when you are trading. All right, guys, so that's all I have for you guys today. If you enjoyed this video, make sure you hit that like button. Make sure you hit that subscribe button, and also join my free Telegram group where I post motivational videos and exclusive discounts for my trading program. And if you don't have my trading program by now, make sure you check that out, because it can take your trading to the next level. Also, the indicator that I showed you guys today, it comes with that trading program for free. All the information is below in the description. If you have any questions, comment below, because I try to answer all your guys' questions. Thanks a lot for your time, and please have a great day.